You've seen this happen, right? Some brilliant new fintech app launches, the tech blogs go absolutely wild, but it never really breaks through to, normal people. So today, we're going to break down that huge gap between the hype and real-world success and figure out why so many great apps just fail to make that leap.
Oh man, this feeling, you know it. You're so excited about some new app that's going to totally change how you manage your money. You think this is a total game changer, but then you tell your friends, your family about it, and crickets, just blank stares. And look, this isn't just a funny story. It's the very first sign of a massive challenge in the tech world.
So this gap, this divide, it actually has a name. It's called the chasm. The term comes from Geoffrey Moore, and it describes this incredibly dangerous jump a product has to make. You go from the enthusiastic early adopters over to the much, much larger mainstream market. And it's not a gentle slope. No, it's a deep, dark chasm where countless promising companies go to die.
The reason this chasm even exists is because the people on either side are just wired differently. On one side, you have the visionaries. These are the folks who love new tech. They get excited about the potential, and yeah, they'll put up with some bugs just to get a peek at the future. But on the other side, you've got the pragmatists. That's the mainstream. That's most people. And they couldn't care less about the technology. They just demand a complete, totally reliable product that solves a real problem for them with zero risk.
So you might be asking, why would anyone even try to take this incredibly risky leap? Well, because the reward is immense. Crossing that chasm is literally the difference between being a niche little app and becoming a household name. If you can prove your value to the pragmatists, you unlock a massive market where your growth can be absolutely explosive.
Let's look at Revolut. It took them over 2 years to get their first million users. That was the slow, hard grind of winning over the visionaries. But once they crossed over into the mainstream, it took them about the same amount of time to add another 9 million users. That right there, that acceleration, is the incredible power of crossing the chasm.
Of course, the flip side to all this is brutal. If you get stuck in the chasm, a company that was once the darling of Silicon Valley can very quickly become a cautionary tale. A product can be adored by its early users and still fail completely if it can't make that one critical jump.
And a perfect and honestly kind of sad example of this is Simple Bank. Early adopters absolutely loved it. I mean, it had this beautiful user interface. It was such a breath of fresh air. But it never quite cracked the code on how to build a sustainable business that appealed to that pragmatic majority. Its user growth just flatlined, and eventually it had to shut down. It had all the hype in the world, but it got trapped right in the middle of the chasm.
Okay, so in the world of fintech, there's this extra, really powerful force that can totally change the shape of this chasm. And that force is regulation. Depending on how rules are designed and used, they can either act like a bridge, helping companies get across to the mainstream, or they can become a massive barrier, making that chasm even wider and more impossible to cross. For example, think about the EU's PSD2 directive. That basically acted as a bridge. It created open banking, which let new fintechs piggyback on the trust and infrastructure of the big established banks. But then, regulation can also be a barrier. Think about those strict identity verification rules, or KYC. They create so much friction. If a pragmatist, someone who's already skeptical, has to scan their passport 3 times and it fails, they're just going to give up and stick with the bank they already know.
So if the chasm is so dangerous, how do you actually cross it? Well, Geoffrey Moore's classic strategy for this is called the beachhead. And there is probably no better fintech case study for running this playbook than the company Wise.
The beachhead strategy is all about focus, insane focus. Instead of trying to be everything to everyone, you pour every single resource you have into dominating one very specific niche market. You become the absolute, undeniable best solution for that one group. And then you use that dominance as a secure base, a beachhead, to expand into other markets.
And here is how Wise just executed this thing perfectly. First, they targeted a super specific niche that big banks ignored, expats and freelancers getting crushed by international transfer fees. Second, for that group, they built a whole product, not just one cool feature, with super transparent pricing and amazing support. Third, this built a fortress of trust within that community. And only then, after they completely dominated that beachhead, did they start to expand, moving from a position of incredible strength.
But what if there's another way? What if there's a modern strategy that could let companies avoid this whole dangerous journey altogether? This is the really fascinating, kind of provocative promise of a huge trend called embedded finance.
So what is embedded finance? Simply put, it's when a non-financial company, like, say, a retailer or an airline, integrates financial services right into their own customer experience. You've seen this everywhere. Think buy now, pay later when you're checking out, or adding travel insurance right when you buy a plane ticket. The financial part becomes this seamless, invisible part of something you are already doing.
And here's the absolute genius of it. Remember, crossing the chasm is all about building trust with skeptics, which takes years and millions of dollars. With embedded finance, a fintech can just partner with a brand that customers already know and love. In a way, they get to rent that trust, completely bypassing the pragmatist skepticism. You're not trying some scary new bank. You're just using a new feature from a brand you already rely on every day.
And just so we're clear, this isn't some small niche trend. The projections for the embedded finance market are over $7 trillion. A number that big tells you this is a fundamental rewiring of how financial services are going to be distributed. It's a powerful new path for innovation to get to the mainstream without ever having to stare into the chasm.
So what's the big takeaway here? Well, whether a company decides to cross the chasm, like Wise did, or skip it entirely with embedded finance, the ultimate goal is exactly the same. Lasting innovation isn't just about the cool invention. That's the easy part. It's about all the hard work that goes into making that invention accessible, reliable, and absolutely essential to the mainstream.
And all of this leaves us with a really provocative question for today's market. If you were advising a brand new fintech startup right now, what would you tell them to do? Should they buckle up for a 5-year journey to try and cross the chasm themselves? Or should they have a 2-year plan to get acquired and embedded into a trusted brand? It's a huge strategic choice, and the answer is going to define the next generation of winners in fintech.